Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Santa Markets. This is the final weekly update of the year, and it certainly has been a very volatile year for the markets, well, certainly in the second half of the year anyway. And moving into the final couple of weeks of the year, the volatility remains quite high, certainly on the equity markets anyway. The support that we've seen for the price of oil in the last week or so, really, the price of oil has started rising, and therefore the sentiment has been able to be improved in these equity markets, and that has certainly driven stock markets quite significantly higher. Now we're looking at the prospect of a Santa Claus rally. The Santa Claus rally is a phenomenon that has been noticed over the last 10 years. For example, the S&P 500 has risen 80% of the time in the last 2 weeks of December, and certainly that looks as though it's continuing at the moment. Certainly the rebound that we had in the back end of last week, very positive close on the week, and the equity markets are positive into Monday morning, into this final week before Christmas. Now, the sentiment has certainly, as I said, improved, and that's been on the back of not only the oil price but also Janet Yellen and the FOMC being a bit more supportive and giving more clarification in terms of rate hikes for next year. It certainly now keeps the door, so it should keep the any potential rate hikes off the table for at least the next two meetings, which probably brings us into where the market has been already thinking anyway, around about the middle to late part of summer next year for the first potential rate hike, and that just gives the market a little bit of bit more clarity, a bit more certainty in terms of its outlook, keeps the Fed's loose monetary policy for at least the next 6 months, and therefore risk sentiment has improved on the back of that. And also, as I said earlier, the support in the price of oil, which had been falling at a fairly significant rate over the past few weeks, that finding a bit of a bottom has allowed the equity markets to just improve slightly once more. Now, the volatility in these markets, especially when looking at the VIX index, that has been significant in recent weeks, and that's just come off now. And I've sort of talked about recently about how falling volatility, certainly on the VIX, coincides with big market rallies, and that's what we're seeing at the moment. We're seeing the volatility in the VIX come off, and the markets have been able to start pushing higher again. So that's certainly what we've been seeing moving towards these last couple of weeks of the year, and setting us up fairly nicely, I think, for a probable Santa Claus rally. Now, there's not a great deal of economic events on the calendar to derail this potential rally that we've got this week, and maybe a little bit of housing data from the States, but a GDP tie-up. But yeah, I think more likely than not, I think the markets are fairly well set at the moment, unless you get some sort of exogenous bit of news flow. But at the moment, things are looking pretty decently set up for the run into the new year. Okay, so where are the Forex markets looking at? Well, certainly with euro dollar, that is a key breakdown that we saw last week. The dollar strengthening last week. On Friday we had a strong move to the upside. Yet again, the dollar index poked to a new multi-year high on Friday, slightly back off on Monday morning, but certainly looks like the dollar is now maneuvering itself for further gains. And this breakdown on the euro below 122.45 has reopened that crucial July 2012 low of $1.2040. In terms of cable, the level or the consolidation range that has been holding up cable recently hasn't quite yet broken, unlike how it has on the euro. On cable, the support at 55.40 remains intact, and whilst that remains on the table, you'd still probably have to play the range. However, I think ultimately that range will break to the downside. Again, on dollar yen, we've had a strong dollar move, a big turnaround in sentiment on this dollar yen chart, and a big top pattern has actually now been aborted. Move above 119.55. That was the big reaction high that it broke through last Friday. Looks to now be pushing on stronger. Again, it's going to be approaching the next resistances at 120 and 121. But I think ultimately it will be regaining the upside initiative now for a retest of that 121.84 high that we saw a few weeks ago. So the equity markets are, as I said, performing very strongly. Big, strong rebounds. Sentiment improving. Looks like we're set up nicely for a Santa Claus rally. The S&P 500 only 0.5% away now from its all-time high again at 2079. So it's within touching distance of that. The DAX little bit less positive in terms of how close it is to the all-time high key resistance at 10,093. But it still is within range this week if it continues this strong run. Now, the FTSE is an interesting one because it actually has been outperforming all these other indices on the way up on this rebound. And the big reason behind it has been the weighting in the oil majors. And FTSE had lost a lot on the way down, but is equally retracing significantly quickly as well, and that's again down to the weighting of the oil majors that account for around 12-13% of the FTSE 100. So the fact that we've got that, the DAX, for example, has no weighting in oil majors, so that sort of balances off the fact that the DAX has not been so positive, but FTSE is still sort of 4 or 5% away from the September high that it saw, just around about 6,900. Okay, so to finish off with gold as well, the gold chart has just begun to settle down now around $1,200. There's no real sort of desire to be pushing this gold price on at the moment. It's a big consolidation. It seems to be that the psychological 1200 level is a bit of a ceiling at the moment. So gold is sort of struggling around that sort of level, but certainly the longer term technicals remain negative. And there's also a near term downtrend that's formed on the gold chart. It's pushing possibly towards a test of the 1180 support again, and I believe that is a long-term pivot level that if that then breaks to the downside, that would confirm a near-term top pattern that would be in place and further downside. So that gold price is teetering on the brink a little bit, to be honest. So as I said, in terms of the economic calendar, finally the economic calendar, what we're looking out for this week, we've got the existing home sales for the US on Monday, and then we're tying up Q3 GDP for UK, Canada and the US on Tuesday, so the final numbers for that. No major expectation of any big changes, although the US is slightly looking higher again. And then into Tuesday, once again, we're tying up a few loose ends. We've got the Michigan sentiment, and also we've got the consumer, the durable goods orders. Now, the durable goods orders potentially, I suppose, being such a volatile number, has the possibility that it could just cut back on sentiment a little bit if it disappoints. But I think most of the other numbers are broadly going to be not doing too much to the market. Then onto Wednesday, just on Christmas Eve, we've got the weekly jobless claims, and then Thursday, after the markets open for Boxing Day, for well, certainly Boxing Day in the UK anyway, but for Japan has its CPI to finish off this week. So I wish you good luck in all your trading for the rest of the year. This is my final video of the year, so I'll be speaking to you again in January when we come back from our holidays. But in the meantime, good luck to everyone, and I wish you a happy holidays. Thank you very much.